Hello, I'm Asif Farouk of Finextra and we're here at the EBA Day Business Forum in Amsterdam, sponsored by ACI Worldwide. We're here to discuss some of the industry's hottest topics: corporate banking efficiency, regulation and payments efficiency. Let's see how they get on.
I think they definitely should. I think the banks are traditionally built, and look at the systems, but also at the current processes and the number of people that are running around there. They've been thought up by economists and lawyers predominantly. And you see that also if you look into the core processes of banks and also the way that they've shaped their IT, it's really based on these traditional processes which has actually been automated. And actually if you look at it now from a data perspective and in a new information age, companies would really build such infrastructure in a completely different way. And that's where you see that actually the competitors of banks have a much leaner infrastructure that they require, and makes it much easier to be also compliant to current regulations, because we have a much better sight now on what you all need, and we build much more flexible infrastructure. I think banks definitely need to make a choice. They're currently doing a lot of activities which is very difficult to excel in altogether. So I think that they all should really look forward and choose a strategy in where they want to excel in. And that could be very traditional from a banking perspective, focusing on their balance sheet and being a party that's taking in deposits and lending out money, rather than doing payments or doing customer advisory. But it could also be just focusing on the payments by itself, by rolling out an international infrastructure and focusing on excellent data transactions. Or it could either be financial advisory, actually shifting into the role of knowing exactly what the customer wants and letting go of your own infrastructure, your own balance sheet, and advising your customer in financial products and making sure that they get delivered whatever they need, whatever delivery, wherever the product comes from.
Well, there is not a risk as such. There is, of course, the debate on disintermediation, but the banks will always remain part of the chain. So the whole battle is, of course, around the mind and the attention of the consumer and the corporates, and it's up to the banks to also answer and play that game themselves as well. So a bank can also be a third-party payment provider just like the others. So it must be a deliberate choice. It can be a deliberate choice of every bank to say, okay, I'm also going into that game as well. We have to be distinguished there on the types of data. There is definitely the behavioral data, and that's very sensitive, but there's also a lot of identity or compliance-driven data, which is very useful for a bank themselves, but also for other online parties, let's say web shops, telcos, governments, and that if with consent of the customer, if they could reuse their own data in those processes, banks can create a lot of value for the relying parties, but also for the client themselves in terms of convenience.
We had a lively discussion about that one as well, because somebody said, yeah, it took us 12 years, and we have now, it's the buzzword, instant payments, and we said, if we're going the same way as what happened with SEPA, then maybe there's a risk that regulators run in this area and we have to implement something which is not really something which is a demand out of the market. Put it the other way around, be in the driver's seat as banks and as PSPs towards the demand side and have the discussion with the demand side, what is really their need, instead of saying regulators do their thing and impose something. And that's what took place with SEPA. That's a lesson learned, and we had a really lively discussion about that this morning.
Well, I think it's a really interesting question, because actually, if you look at the industry, the payment industry, it's kind of formed of a triangle. And if this is the retailers and the merchants, this is the retail bank, and this is transaction bank, then actually what I see is happening is the retailers are driving that debate, either to the retail bank or from a treasury point at the merchant, driving down to the transaction banking of what they want and what their needs are. So I would also say that the regulator is using them as a proxy for the actual consumer. So I would say that the retailers or the merchant retailers are driving the debate right now. Well, I think there's a lot of conversation that's being had about trying to do things pan-Europe, a bit like SEPA. Well, you know, that took a long, long time to get out. And I kind of think that some of the countries, like you know, here in the Netherlands, maybe the UK, the French, Italians, I think they're more likely to get together and work out how to build those rails to actually do it a lot faster than actually saying, oh, you know, let's sort out the whole of the region. I think that's just too hard, too many people involved. And I think actually once they've done that, you know, there'll be simple ways to use gateways to be able to roll it back up into a pan-European play.
I think it's now time to show the courage to the market that we can change our infrastructure. We should get rid of our old-fashioned batch processing infrastructure into a real-time processing infrastructure. And we should do the investment now and not in 10 years, because if in 10 years we are too late for that.